Good afternoon, dear colleagues. As always, ForexTimes Dance Project shooters, as always, Sunday broadcasting from St. Petersburg. And as always, I invite you to join the community of ForexTimes for at least 7 free days to see what we brew and what we eat. And what we're eating, give me a head start. I'll even do a consultation with you. Of course, I'll tell you for free, show you around, in case you like it and in case you want to become a member of the Forex community. Although I'm sure you know by heart what every time I talk about it. Next time I'll tell you an introduction to something else. So thank you, everybody. Who's going to be listening to this today? Listening, and let's go today. As always, let's look at the likely movement of trading for the coming trading week, and let's start with the euro. The euro is a very interesting situation. I've been talking during the trading week in the community about this very interesting level, namely the accumulation of option contracts worth 300 to 78 million that were added to the 114 million that we had earlier, which is the most interesting thing for the upcoming trading we're seeing professionals call options hajirov. And this is maximum open interest in call option contracts that professional participants of the commodity exchange hedge their futures trades. It's for sale. They've rewritten themselves to exactly this level. This is actually the main target level for the euro dollar. But we can see that according to the Commodity Futures Trading Commission on the Commodity Futures Trading Commission reports, that we've got a continuation of the decline in buyers by 5% until the trend is still uptrend, but the decrease in buyers by 5% indicates a possible corrective move down. And what's interestingly, this corrective move could very well reach the level of a cluster of option contracts already, in the way that professionals are hoarding their futures trades to buy, and the level of the market maker's loss, where the organizations which music provide liquidity in the futures options market will protect their positions, that the price didn't go down. I'm going to think, and I really like for price to get to that level during the Monday, Tuesday, first half of Wednesday. And I will be looking, buying the euro dollar with a target. You've already realized the level approximately 110, 10, 10, about 110, 10, 10, 11, 10, 10, 15. But you remember I wrote about the level of 110, 20 price, didn't go to it, it went down. But we still had professionals added option 378 million in option contracts, and they rewrote their expectations upwards. So there is one big, but from the point of view in terms of the wave structure of the market at the moment, at this point, the renewal of the low suggests that we're continuing to the downside, and that could put into question our buying at the moment, could be in question. So let's take a look at what's going on right here on the Chicago Mercantile Exchange. What we have going on in the Chicago Mercantile Exchange is that if you and I look at the expirations, we see that next week we don't have expiration of the weekly option because we have September 8th expiration of the 1-month equity contracts. If you and I look at the expiration of the weekly option contracts on September 15th, we'll see it strike 110.25. That's a gain. We've got $475 million of options contracts. The thing is on the strike. Now, what are we looking at here? About strike 1.07, somewhere in the neighborhood of the 107. There's nothing big here. And in fact, yes, that's an increase of 90 plus million is the expiration by September 22nd of the option contracts. And that's where, yes, we're going to see, this is a major infusion of dark contracts way at strike 107, 107, 107. Actually, that gives us that. Of course, it would be great if we don't pay attention to the wave structure of the market. Of course, it would be very nice on Monday, Tuesday to get to these option contracts and then fly up. But the thing is, it's also great to actually by September 15, go up to work out these option contracts, and then from here and then fly sharply downwards in time for the week of September 22nd to work out a 93 million option contracts here. So, dear colleagues, the conclusion is that the minimum is still unbroken at the moment, with you exclusively an upward trend. The thing is that here in principle, if I take a big enough owl and put it on globe, to animal advocates right off the bat, I love owls and globes. Actually, here I am. I see momentum here, and Kohli is momentum. Let's say even corrective waves, and we are now in a corrective wave B, and it looks very beautiful to grow into corrective wave with a target. Actually, when I said that 1.10, 1 plus 10.15, that's the market structure will be oriented now. But the thing is, you and I have to work according to patterns. If we have a plan forecast that I'm talking about, this is a certain plan, is a plan for the future. But in order for this plan to work, it is necessary to have an understanding of market entry, namely according to patterns, and of course, competent capital management, of illiterate capital management. It is better to keep out of financial markets to stay out of. That's why at the moment, if I have, for example, pin bars pattern with liquidity withdrawal, i.e. that is a bar with a minimum, for example, such a miracle will pop up. I assume very well that those who are here who bought stop losses can place here, and those wave makers who will to work on selling, they will work with pending orders. And if there's a pattern here, I'll know perfectly well that he took out these pending orders. Activated, removed the stop loss and the buyers. But still, someone managed to power all this liquidity activated all the same to drive the price up. So here I am. I conclude that this is where professional do with whom together I will want to go up, or dear colleagues, I will see on smaller time frames impulse, and then on the correction, I will either buy from the range of 50%, 60, 18, or pending buy stop orders. But this is how the situation with the euro is developing at the moment. The situation with the euro, however, by the way, yes, just so you understand. However, if just the euro goes down on Monday, Tuesday, Wednesday down, it's not a big deal. Let it go. We don't need styrofoam. We need this styrofoam. Styrofoam will be needed when it flies down to the level of approximately 10-68106.85, and then I'll be here. What do you think I'm going to do, right? I'm going to wait for my patterns with which I work on Forex. Hopefully. Dear colleagues on the euro, I see, let's move on to gold, which most likely everyone is waiting, and so on gold. There are two variants, both of them are for sale, but there is, as always, but I'll show you this, so we'll decide how we're going to work. So actually, I've been doing this for a few months, even though a lot of people here have been saying that we should buy as we start to go up and the correction is over. I've always said that it's probably not over yet. So this is we're in a wave and a bunch of waves. A wave would be, we go to the wave, why not vary? Everything looks beautiful. In principle, at the moment, it's most likely is happening. However, there are other variations on the theme. Why, for example, we don't have a pulse. For example, 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 4, 5. If we do have momentum, then we're going into correction, and then we're going up. The point is, dear colleagues, that if I'm right in the first option, if I'm wrong, but option number 2 works. We have you and I are either going down, or my option, we fly down globally, or the impulse variant, we fly away on correction. Either way, if we're going to sell, we need that in my option. We need momentum, as I've curve impulse, I've drawn. We need momentum correction, and then try to sell if we're going to go into a correction. Then just a simple correction, and enter to sell, you see. And in the first variant, in the second variant, we need to sell only in the first variant on momentum. In the second variant, we can also sell on correction. And now, but the one I was talking about, those of you who work here in the community know that I'm very fond of the Fibonacci retracement, and I love the Fibonacci extension. And if I assume that we don't have the momentum of this here, this monster here is not really momentum. This is a correction. It's actually missing one wave, 1, 2, 3, 1, 2 bundle, but in general, it's already the principle of the third wave is over. But now I'll show you this one, but it's right here. Right here, 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 right here. But it is that if I pull the extension, you'll see so 1, 2, 3 wave and the bunch of waves be and where we're most likely to have end our movement right here. Here we have is the 78.6% level on the Fibonacci grid, Fibonacci and expansion level, Fibonacci 161.8% of waves a B. I'm guessing most likely not. Wrong. I guess most likely we're going to go down in the coming trading week. But we have the reports from the Commodity Futures Trading Commission, an increase in buyers by 24%, which means that not only have buyers have entered the market, but the trend is upward trend, and there are 24% more buyers than sellers. Therefore, I conclude that most likely the market can, during Monday, Tuesday, Wednesday, to rise to this resistance range is a very strong resistance range. This is also where the level of the hedgerow premium and the level of the Hajirovka premium is the level at which is most likely to maximize volumes. The professional commodity exchange will open futures for sale and from this range, 1965, 1968. I will consider selling here. That's exactly how I'll work. That's exactly how I'll work. That's exactly how I'll work, exactly like this. But if suddenly, of course, I see an impulse down 1, 2, 3, 4, 4, 5, of course, I'll forget about this level. I'll forget about this level forever. After the correction, I'm going to consider selling like this, either with pending sell stop orders or from the range of 61%, 50% on the Fibonacci grid from the momentum of this impulse. You know what I mean? Day in and day out, excuse me, please. Week in and week out, I tell you about my patterns plus pin bars. Of course, with liquidity withdrawal. Here it is, by the way. There's a pin bar with liquidity withdrawal of liquidity, by the way, at 61.8%. There is a pin bar on the Fibonacci grid, which updated the maximum value and flew away. Down, which tells me that someone has eaten up liquidity and really wants for the price to go down. But there's a big problem after this pin bar. Another reverse pin bar was formed. Here we have one pin bar. Here are two, and the reverse pin bar quite often, very often stops the trend. And by the way, you can see that I just wanted to give you an example. We have a great one, an example for a sell entry. Well, this is a really sick pin bar. Let's call it in quotes, but look after this sick pin bar comes a pin. Bars with liquidity withdrawal, aka reversible, and then the price goes down. On the X2 of this pin bar of this magnitude, pin bar at X2, that is the price, for example, goes up, then it corrects itself. Here we have a pin bar. And after it, we have a reverse pin bar with liquidity withdrawal, because here, pending orders to buy and stop loss, and those who are here, who sells here, someone eats up all this liquidity, makes a pin bar because it has the power to bring the price back down, and then very often the price goes down by 2x of the value of this pin bar, by at least 2x's. Please remember this pattern. You can simply, working with this pattern to make money, just sit there and look for this particular candlestick combination. And when you really find it, you'll have it in about 75% of the time it will work for you. And 75% with a stop loss ratio to profit is at least 1 to 2. You know, that's just simply mathematical expectation is completely on your side. Dear colleagues, the S&P 500 index. The S&P 500 index is very much, many people write that it should be to buy. And I, just as I used to do with gold, before I was talking about the S&P 500 index. And I don't understand what we have going on here. Let's say this movement is good. Correction. We have more or less some kind of correction, but we have another movement. And from this movement, we have this correction. I beg you, let's at least have this kind of correction, at least percent. It's even up to percent, 38.2. Fibonacci doesn't come to 38.2. I can visualize it. I can even see that the correction from this wave, dear colleagues, didn't even reach 38.2% Fibonacci percent. Why not reach this value after all? It's right to think so. Let's look at a smaller time frame, and here we will see a corrective wave, a collector wave 1, 2, 3B. Something's missing. A corrective price wave is missing. But actually, that's all for the S&P 500 index. I won't even talk about it for a long time. A corrective wave with, therefore, in any selling pattern, I recommend to sell. Dear colleagues, today will not be the index because I will be selling it, and I have been selling it, and I am selling it, and I will sell it at the slightest selling patterns. If there are any, I don't see any selling patterns. I'm sitting here smoking bamboo. If I see any selling pattern, I start working it out because the 31,000 level will be reached. Because in the last 3 years, no large accumulation of option has been ignored by the price. And this cluster of options contracts is the largest in 3 years. So the S&P 500 index is going to work out the level 31,000. Dear colleagues, was Dan Rifleman. Have a great evening, everyone. Come join us in the Forex Times community. You won't once regret it. By the way, of course, we have training. I think you're very well aware of that. You're well aware of that. Bye-bye, everybody. Bye-bye.